Welcome to the opening keynote at DealStreetAsia's Asia PVC Summit. What a difference a year can make. Last year, we were at a physical event at a packed ballroom. And this year, we are joining from our respective offices and homes. So I'm being joined by Jeffrey Perlman, Managing Director, Head of Southeast Asia, Warburg Pincus, for our opening session. Jeffrey needs no introduction, but I'll just take a minute to quickly run through. He is the Managing Director, like I said, Head of Southeast Asia, and he's also a member of the firm's executive management group. He leads Warburg Pincus's investments in Southeast Asia, in addition to the firm's real estate efforts across the greater Asia Pacific region. Jeffrey, delighted to have you join us. A year ago, for our opening session, you were on stage interviewing ARA co-founder John Lim. And this year, you are joining. We're all like I said, we're joining from our respective homes and offices. So we have 30 minutes. Let's jump in, and let me start with maybe 3 or 4 big picture questions. Obviously, the biggest issue around us today is COVID. But despite the COVID, when it comes to Warburg Pincus, you have been very active over the last 12 months. You invested in Converge, you invested in Circles, you did large follow-up investments in ARA, BW in Vietnam. You got exits in ESR, a partial exit in Converge, the recent IPO. How have you been doing all of these deals? And also, has sort of COVID softened valuations a bit, making some of these deals more attractive?
No, it's great to be here, Joji. Thanks for having me. Look, I certainly it has been an interesting last almost 12 months now since we all got together. And what I would say is, look, we've been able to stay active. Part of that is a lot of our platform investments. This really, it's windows of time like this where others may not have access to capital in each of these respective sectors, and we're able to provide capital to each of our platforms to really try to take advantage of the market and to grow. And so I think that's really been a lot of the activity. Some of the investments that we made, as you referenced, Circles and Converge, these were obviously investments where we were able to spend a lot of time on the ground over the previous 12 months leading up to COVID, and obviously in an environment where we all can't travel as much as we would all like to, it's obviously makes that a little bit more challenging as you think about new deals. But basically, in combination with a lot of the work that we had done leading up to COVID, and then really being able to continue to fund the growth of our platforms during COVID, it's made for certainly a very busy 2020.
Just another question on Converge, because we started with it. It's the largest IPO Philippines has seen. Did you sort of expect the company to go public so quickly after you listed, or did you see your investment more as a pre-IPO deal? And how big is the market opportunity in Philippines for a company like Converge?
Yeah, no. Look, it's a great question, and certainly when we make the initial investment, we're very much thinking for the longer term. But to the credit of the company, they really outperformed really kind of our wildest imagination when we were first making the investment. Really a credit to Dennis and Grace, the entrepreneurs behind the business. And with a business that's essentially an infrastructure business where there's because of how big the market opportunity is, you obviously want to make sure you can fund that future growth. We really felt that in a way it really de-risks that opportunity by taking it public, to get access to that capital, as well as to get support from the local banks in the market. And look, we're hugely convinced in the market size. The company already passes about 5 million homes today. It's got nearly 1 million subscribers. And look, I think the company's target in the next 5 years is to cover 50% of Filipino households, which we think is achievable. Filipinos are looking for fast, affordable, reliable internet, and because of the 2 legacy telcos, there hasn't been really anyone focused to provide fiber in the way that Converge has been able to do it. So really, I think in our view, the key is to make sure the business is funded, which it is now, and now it's really about being able to continue the growth trajectory that they've been on.
Interesting. Just last year at this time, right, we began with a fireside chat with ARA's John Lim. And since an ARA has been very active, they've acquired logos, they've continued to invest in Australia with Cromwell, and they've expanded to new areas like credit and infrastructure. They've been doing several funds. What's the path forward for ARA? And is there an equivalent of a company like ARA in this part of the world?
Well, I think first and foremost, I think, after the fireside chat, John wanted to give you a lot of material to work with in the subsequent 12 months. So I think mission accomplished on that front. But look, what we're witnessing, and this is really where ARA is so well positioned, is the financialization of real estate, which is really just beginning. You're seeing, obviously, Singapore has been a large REIT market, but you're seeing C-REITs, the Chinese REITs, being launched here over the next few months, the pilot projects, which will be in logistics and infrastructure. You saw the first set of REITs get listed really last year in Korea, but the first really large institutional one will be the ESR REIT coming in Korea, the K-REIT before the end of this year. So that's pretty kind of transformational in its own right. And ARA is the largest real estate fund manager in Asia, is really well positioned to play into that continued trend. Investors, as they pivot more to Asia, are increasingly going to need professionalized management of real estate, and that's where they're so well positioned. So as a part of that strategy, the management team has been very, very focused on entering other verticals of real estate that they know investors are going to gravitate towards. So logistics certainly being one of the biggest, and you've heard us talk a lot about that in the past. Infrastructure, which is continually becoming a bigger and bigger focus for investors. And then real estate credit, which is very underserved in most of the markets in Asia. So that's really how they're approaching it. And it really just grows the pie in a way from their existing base of all the various verticals that they control today.
So with so much going for ARA, do you see them looking at an IPO in 2021? They've been talking about it in the past, but is 2021 the year that you'll see them list?
It's hard to obviously comment on that part of it. But what I would say is certainly, the business is now approaching AUM of $100 billion US. So certainly the size and the scale is there. This was a company that was incredibly successful as a public company for a decade, so public market investors know them well. I remember when we were privatizing it with the existing shareholders, and at the final AGM, the investors were standing up one after another. The retail investors saying, "Please, John, don't sell. We want to continue to own your stock." And so I think it would get a very warm reception if obviously we were to bring it back to the market.
And do you see that happening in the next 1 year?
Hard to say. Obviously, if you asked me at the start of this year whether we would have a pandemic, a global pandemic, I probably would have taken the under on that. So, look, hard to say, but certainly well positioned.
Got it. When we talk about ARA, the other interesting company in the same space where you sort of co-founded is ESR. You co-founded it Warburg co-founded about 10 years ago with a bunch of entrepreneurs. They've also witnessed massive growth over the last decade. They've expanded they initially started off in China, but they're expanded to several countries across Asia. They listed, the stock has been up 50%. So what's the road ahead for a company like ESR? Is it like a global presence, or is it expanding to more markets within Asia? How do you see that?
Yeah, no, look, it's, ESR has obviously been a great story. And look, I think the opportunity certainly has been in Asia. It's if you look over the past, decade, it's represented 53% of global growth has just been in China, India, and Southeast Asia. And most are so underserved when it comes to modern logistics. So that's really been a key focus of the company. And as we look forward, one of the areas that has been kind of untapped still for the company is Southeast Asia. The company is certainly focused, and as you look at the size and scale, the market opportunity, 650 million people. Indonesia certainly stands out in that regard, as do markets like Vietnam and Thailand.
You spoke about Southeast Asia, so I just want to switch gears a bit and look at the tech scene in Southeast Asia, because this session was supposed to be the battle for Southeast Asia, and this is a region. The Thammasat Google Bain report said that the region is like $100 billion internet economy. But for a private equity investor, how big is the opportunity in Southeast Asia? When you sort of compare this region to markets, let's say China and India, is the tech internet scene big enough for large private equity firms?
Look, I think certainly it is, and I think we've already demonstrated that, just even in our own portfolio with investments in companies like, Gojek and Momo in Vietnam, being able to write sizable checks in these areas. So I think certainly that's the case, and I think this year alone, I think Indonesia is now kind of probably even surpassed India in terms of e-commerce GMV. So I think that surprises, that'll surprise quite a number of people. So I think it's definitely hitting that kind of inflection point. Typically, you see it in a lot of markets once e-commerce penetration rates, as a percentage of total retail sales start to hit that kind of 5-6%, and we're getting closer to that in a few of the markets in Southeast Asia. So the base is still low. It's got a lot of opportunity to grow. One of the challenges, and I've said this before, Joji, is that what's missing still in Southeast Asia has been some of that capital to get some of these companies from that kind of, there's plenty of funding for the pre-Series A, Series A, but that kind of in between Series B, smaller kind of still round of a Series C, it's taken folks like ourselves to come down a little bit into that territory to fund some of that. But you have a lot of good companies that are next in the queue to emerge. And I think what's going to be key is making sure they get the funding so that these can become, eventual, unicorns in the market.
So is there still a big funding gap in Southeast Asia when it comes to the maybe Series D or E type of deals? I'm asking because in this region today, we have a lot of global investors who are active. A lot of VCs here have gone on to raise growth funds. And we're also seeing a lot of strategics, be it Chinese strategics like the Tencents, the Alibabas, and a lot of US strategics, Microsoft, Google, all of them, Amazon, all looking at investing in companies. So is the funding gap still there when you look at the big picture for Southeast Asia?
I think the funding gap has certainly shrunk a bit, especially a little bit as some of those even VC firms have gotten a little bit of growth equity as well, so they can play a little bit more into kind of the Series B. I think, again, folks like ourselves have had to come down a little bit as well. I think where there's still kind of a funding gap, which is maybe not surprising in a post kind of WeWork world, and also what we've seen with kind of cash burning businesses, is just less of a desire for certainly some of the larger private equity firms to be willing to take some of that risk on kind of path to profitability. And that's in a way a little bit unfair for some of the Southeast Asia businesses, given that most other markets, whether it was China, et cetera, that had the opportunity to kind of burn money for a period, demonstrate the model like a Meituan, for example, and then become, quite profitable on the back of it. And so that's one of the challenges just in the current environment, what some of these platforms have to deal with from a funding dynamic. So I think that's going to continue to be an issue. And I think what it's going to do, it's going to force some of these businesses to really look towards really defining their path to profitability sooner than they would have, probably, 5-6 years ago.
Interesting. I just want to stick to the tech space and also, on Indonesia. And because you're one of the early investors in the largest decacorn there, which is Gojek. When it comes to the likes of Grab and Gojek and the whole conversation in Southeast Asia, everybody wants to be a super app. Everybody wants to be the WeChat of this region. How feasible is it even to sort of build a super app across Southeast Asia? You have Momo in your portfolio, and they want to be the super app in Vietnam. So is it even possible to sort of build a super app like a WeChat that does across all services in Southeast Asia?
Yeah, it's an interesting question to look at. Look, WeChat and Tencent, I mean, they're in kind of their own league and category. I do think I think the term super app is used very loosely in Southeast Asia. But what I would say is there's certainly the power of the platform. And I think you see that obviously with how Gojek evolved their business, starting with the crowdsourced fleet of drivers that didn't need to just deliver people, but ultimately goods, services, and ultimately that then, they needed to overlay, just given the fact that, 2/3 in the country don't have bank accounts, 95% don't have credit cards, overlay kind of digital payments on top of that, and now using that to really push into financial services. So I think there is, real logic behind a bigger, broader platform. As we also know, one of the benefits that platforms like Gojek has had is that investors, as they kind of moved and pivoted towards Southeast Asia, they felt most comfortable giving capital to the biggest players, which allowed them to also kind of further expand the platform dynamic that comes with it. I do think it's easier to be kind of, as you said, a super app in a specific country. So to your point, Momo is really evolving in its own right into that kind of more super app nature. In a market like Vietnam, I think certainly Gojek has done it really the best so far in Indonesia, looking to continue to take that outside of Indonesia. But that's really the way to think about it from our perspective.
But how is Gojek phased overall, especially because they have partners like Facebook, they have WhatsApp, they have Google, they have Tencent, they have PayPal, and these partners bring in a combination of expertise. So sort of, does that sort of put Gojek in the driving seat if it wants to sort of build a super app across Southeast Asia?
Look, I think there's a tremendous optionality that comes with the types of strategic investors that they've been able to bring into the company. I think that's what's really incredibly unique about kind of Gojek in a way versus Grab is pretty much all the international strategics have gravitated towards Gojek, right? Whether it was Tencent and Meituan from China, Google, Facebook, PayPal from the US, et cetera. And so each of them have their own ambitions to their own strategies in Southeast Asia, and I think they see Gojek as a platform with which to accomplish some of those goals. Maybe not all of those goals, because they feel like they can probably do some of that directly. But I think this is where Gojek can tap into those various relationships, to your point, to further expand their own offering and make it that much stickier, hopefully, to their end customer.
So all of these partners that we mentioned for Gojek, was it confidence in Gojek or perhaps confidence in the Indonesian internet economy as a whole?
Yeah, I think it's both. I don't think it's one or the other. I think certainly they gravitated towards, I think, the vision, the execution, the management team of Gojek. But I think you always have to have the backdrop of and the overall addressable market that comes with a market the size of Indonesia. Fourth largest country in the world, 260 million people, and many of those that have kind of gotten past that inflection point in terms of disposable incomes. So I think they see how big the market is, how big the opportunity is, how kind of still informal even e-commerce is in the market, and they see an opportunity for themselves to fill that vacuum and to leverage a platform like Gojek, to do that. So I think they're very symbiotic between the two.
And it's not just Gojek, right? In the sense that if you look at the recent deals, both we've seen the likes of Microsoft invest in Bukalapak. There was Google in Tokopedia recently. So when you look at the battle for Southeast Asia as a whole, along with PE players, how do you see the battle being shaped by strategics both from the US and strategics from China? Because they compete with the growth funds. They compete with players like you for the same deals in many cases.
Yeah, I think it's in some cases less a competition, because in a lot of times either we will have probably kind of invested first, probably de-risked it in a way for them to then kind of come in to some of these platforms. So I kind of see it less as necessarily direct competition. It can be actually quite complementary to what we want to achieve longer term with some of those businesses. But look, I think there will be continued competition amongst strategics. Certainly from North Asia. I think as China looks to export a lot of the talent and technology, Southeast Asia is the most probably natural fit for that. And I think you're seeing that more and more given the activity from some of those players. At the same time, again, some of these larger U.S. strategics have huge presence in this part of the world. and you think about, how big Facebook is in markets like Indonesia, Vietnam, what Google is in terms of, that core search engine. So both of them are, both sides, North Asia, US, are going to continue to play in the sandbox of Southeast Asia. And I think we all have to be prepared that that's not going to change anytime soon.
The biggest talking point in Southeast Asia is a potential, I don't know, it's like been reported quite a big potential merger between the two largest private internet companies here, Grab and Gojek. You are an early investor in Gojek. We've reported that investors from both companies support a potential merger. Where do you broadly stand? Is there anything that you can share in terms of where we are on this?
What are the name of those two companies again? No, look, can't, it's tough for us to kind of comment. Obviously, at this stage, there's obviously a lot of rumors out there. Certainly, each are focused on their own respective businesses. We've seen obviously mergers in this space and other markets, and including even in Southeast Asia previously between, Grab and Uber. So I think, really nothing to in terms of to be able to break news on this session and this panel this morning.
Yeah, let's another interesting portfolio company that you have is Trax, Singapore headquartered. We reported that they are preparing for an IPO. Any update that you can give us on the potential listing? And a broader question related to IPOs. If we look at Southeast Asia as a whole, we have had the C Group listed in the US. There's Razer. And we're not seeing much of other large listings in this part of the world. And considering how C Group's the stock has performed, the shares have sold, do you therefore think that by choosing to stay private a lot longer, some of these unicorns in this part of the world, their sort of investors have lost out?
Yeah, I think you can't necessarily look at it through that lens. And what I mean by that is, C had the benefit of obviously Garena, the gaming business that was already kind of profitable, right? And so that gave them an avenue to really kind of take that and have investors buy into that first. They could value that, and then have the option value of essentially the e-commerce businesses, other businesses that were effectively going to continue to burn money. The other kind of, again, businesses needed that opportunity like they've had in other markets like China and India to still grow for a period, obviously be users of capital before obviously turning profitable. So I don't think there's been like an intentional delay in taking some of these companies public. I think they needed to be able to demonstrate proof of concept on their business and eventually kind of be able to now direct a path to profitability for public market investors to kind of be receptive to it. I think we're now reaching that inflection point where some are now kind of being able to be able to demonstrate that. And I think there will be a very good window for some of these companies to go public over the next few years. We've seen obviously the strength and performance of C and a credit to kind of their management team in delivering on that. But I think that's a good thing for Southeast Asia as a whole. It gives investors like ourselves another pathway to potentially obviously seek liquidity from those investments. And look, public market investors do want more exposure to Southeast Asia. They just really don't have another way to access it other than for this next wave of companies to eventually list. So I don't think any investors feel like we've lost that. We had to get these companies in a position to be able to get public market investors comfortable with that path to profitability, and I think several of those will be ready here in the not too distant future.
Got it. A related question to IPOs is one common complaint when it comes to markets like Southeast Asia, the lack of exits. IPOs are not easy. Over the next 2-3 years, several private equity firms, GPs, now they would have sort of come to the end of the vintage that they were investing from. So how do you see the exits play out? Do you see more secondaries happening? What's the road ahead for Southeast Asia?
It's another interesting kind of dynamic, which I think will play out to your point over the next 18, 24 months, is some of these investments that for whatever reason, because it has been a little bit tougher to access the public markets in Southeast Asia, that they're running up probably against the liquidity constraints in their respective funds. So I think you're going to see really two things happen. One is going to be, I think you're going to see a pretty active 2021 as it relates to some trade sales, as it relates to some of those businesses. I think you're also going to see even potential partial monetizations through secondary transactions. So maybe a sponsor selling half their stake or something, and that next kind of maybe private equity investor stepping in for the next phase of the journey. And maybe they don't do it all in one go. They're doing it maybe in two steps. And then the third is I think coming out of COVID, potentially an opening up further of the capital market for some of these companies to go public. This has not been a particularly good year, as you can imagine, for the public markets in Southeast Asia. We've seen it. You really have to have an incredibly high quality business to be able to take it public right now. Fortunately, we had that with Converge. But at the same time, the Philippine Stock Exchange has been one of the worst performing exchanges globally during that period. So not exactly the most conducive to be bringing companies to market. But I think the hope is as we turn the page into 2021, probably second half of the year, you should see that activity, I think, pick up considerably.
Got it. Before we're sort of running out of time, but just want to quick one or two questions, Jeffrey. Moving away from tech. You have a big real estate play across Asia, especially in Southeast Asia. How do you see that space in 2021? What's been the COVID impact in that space overall?
Well, look, I think you're going to continue to see a huge shift from kind of old economy real estate to new economy real estate. And when we think about new economy real estate, it's really anything that's kind of technology driven, technology enabled. So, e-commerce and cold storage, logistics, data centers. You've got nearly 2.5 billion internet users, IT office parks, even kind of life science real estate starting to emerge in markets like China. So I think these are the areas that will continue to be prioritized by investors. They've also been the most resilient during COVID as well. So I think that's gonna play an important part. At the same time, as I mentioned, you also have now this kind of financialization of real estate. This is really exciting for investors because if you went back even 6, 7, 8 years ago, there weren't many avenues to exit real estate. As I look forward now, you have multiple ways to kind of exit, right? You can potentially access now local REIT markets. You can, companies, even like an ESR didn't barely exist 8, 9 years ago. Now these are large aggregators of assets, potentially being able to sell into folks like an ESR or a GLP. You now have insurance companies that, frankly, even several years ago weren't even able to legally invest in real estate and are now able to do that. And then you also have, I think, all of this other foreign capital that's going to pivot towards Asia Pacific because, look, it's going to be first in, first out when it comes to, I think, COVID. And I think investors are going to look towards growth and where they think there's probably greater likelihood for cap rate compression. One statistic I love to point to is, logistics yields are still about 200 basis points higher than office in Asia, whereas in the US, it's already inverted. Logistics now offer lower yields than office. That's kind of inevitable. It's going to start to continue to compress as time goes on here in Asia. And part of that's going to come from the REITs that emerge, and you'll see kind of cap rates, I think, compress on the back of that.
Sure. Just a related question, because you had briefly mentioned data centers. We've seen a lot of private equity firms, even sovereign wealth funds look at the data center space in Asia, especially in Southeast Asia. With more countries specifying rules in terms of data being stored locally and as other regulations come in, how big is this an opportunity for private equity?
Look, to put it in perspective, I remember when we first started investing in logistics back in kind of 2010, 2011, and I used to make the parallel that there was more modern warehousing stock in Boston, Massachusetts than in all of China. And today you could even say, I think there's more in the state of California still than there is in China. To put that kind of supply imbalance in perspective, Asia, which will become, again, 2.5 billion internet users, the shortfall in terms of modern supply is even greater and more pronounced in data centers than it is in logistics. And so we think, again, as you look out forward over the next decade, there's a huge opportunity within data centers. And we're playing that obviously through various portfolio companies that we have. And we think that as you think about areas to invest in real estate, data centers would certainly be in that top probably 2.
Got it. I just want to take 2 audience questions because it's 10:15. We had a 30-minute session, but just 2 quick audience questions. A Trax IPO, will it happen in the US or in Nation Exchange? That's the first question that we have.
Look, I think most kind of SaaS-related businesses, as you've seen, have historically, listed in the U.S. So, can't kind of comment, here, but I think indicatively, I think that's how most have approached it in the past.
Yeah, and related to Trax, when do you see an IPO happening? Is it somewhere in the next 1 or 2 quarters or 2021? Any broad time frames that the company is looking at?
You're really pressing me for details today on some of those IPOs. And look, I think just given, again, public markets, and we got to be careful in terms of commenting on kind of timelines as it relates to that. So unfortunately, I can't give you a perfect answer on that.
Yeah, I'm just reading the questions. The only questions that we have are related to Trax and Gojek.
I'm convinced those are still your questions, though, but it's okay.
No, seriously. So the other 2 questions that we have are related to Gojek. Should Gojek expand or wait until something happens with a potential merger with, or should they be as aggressively looking at other markets in the region?
Well, look, it's a good question. I would say, fortunately, the business is well capitalized. I think they also use the benefit of the downturn to kind of right size some of their own cost structure, which is only even that much more incrementally positive as we think about the business going forward. So look, there is an opportunity to continue to grow the business, and I think that's the way that the management team is thinking about it. You can never run a business expecting some form of an M&A event to occur. Right, you've got to focus on your business, your vision, and go out and execute that. And I think that's what the company has always done, and I think we'll continue to do.
Yeah. And the last question I'm taking is, what percentage of your Southeast Asia fund is for Southeast Asia? Do you have any broad numbers in terms of how much you will invest in this region? Because I would assume a bulk of it is also for China.
Yeah, no, it's a fair question. We don't have a specific kind of target. I think it's a little bit predicated on where the best risk-adjusted opportunities at that given kind of point in time. I think when we looked at it, we probably assumed something in the neighborhood of probably 2/3 China, 1/3 Southeast Asia, somewhere in that kind of fold. I would say we're at a little bit of a disadvantage at the minute in that China is operating almost at 100% capacity, and everyone can travel within the market. Whereas obviously sitting in Singapore, as we all know, we can take flights to nowhere, we can take cruises to nowhere, but unfortunately we really can't go anywhere where we need to go. and that's something that's probably not going to pick up until the second half of next year.
Yeah. Thank you, Jeffrey. We are out of time. I'm so sorry if there are a couple of more questions that are coming. I'm so sorry we won't be able to take it, but I can send them to Jeffrey after this on email, and let's see if he can reply to some of those. But thank you so much, Jeffrey, for joining us for the opening panel. It is great to have you back this year, and all the very best for 2021. We just hope that 2021 is very different from what 2020 turned out to be. Thank you for joining us.
Absolutely. Thanks for having me again. Appreciate it.
Thank you. Bye-bye.